Good afternoon, everybody. Welcome to Azzad Zakah workshop. There's a lot to learn about zakah, the obligatory charity owed by Muslims. This presentation will provide a brief overview of who should pay zakah, what property it is owed on, and how to calculate it on certain assets. I'll take a moment to introduce your presenters for today. We're joined today by Azzad's President and CEO, Bashar Qasim, who is a certified Sharia advisor and auditor, one of the few in the US who holds that distinction. And my name is Fatima Iqbal. I'm a certified financial planner at Azzad, joining you from Chicago. I'll be giving the main presentation today, and Bashar will answer questions from the audience. Please note that we're presenting information based on generally accepted Islamic principles following standards published by AAOIFI, the Accounting and Auditing Organization for Islamic Financial Institutions. It's not intended to be comprehensive in all schools of thought. This webinar is intended to provide a brief overview explaining the general principles of zakah calculation. You can always learn more by contacting us at 888-86-AZZAD. Azzad Asset Management uses halal investment guidelines established by AAOIFI and adopted by the Azzad Sharia Advisory Board. Now let's turn to today's topic, zakah. So first, let's understand the basics of zakah. Zakah is a financial obligation on every Muslim who owns a certain kinds of assets worth more than a set amount called a nisab, and if they have owned those assets for at least 12 lunar months, called a hawl. Zakah is mentioned in the Quran 81 times, and it's often mentioned along with prayer. While giving to charity is a financial transaction, it's an integral part of a Muslim's spiritual health, and specific care should be given in making sure it's handled correctly. Zakah is an opportunity to cleanse your wealth by giving it to help those in need. Zakah is obligatory on every living Muslim regardless of gender, age, or mental status, who owns assets that meet the other conditions of zakah. However, if certain conditions are not met, then it does not remain compulsory. So let's look at the conditions that must be met before zakah becomes obligatory. I'll just list them now and then explain them in the next few slides. The conditions are owning at least the minimum amount of wealth, called a nisab, the lapse of 1 lunar year, complete ownership of the assets to our particular person, no other reason for assets not to be zakatable, such as insolvency, and the assets must have some real or assumed growth. So first, the total amount of wealth owned by an individual must meet a minimum threshold called the nisab. While prophetic hadiths describe the threshold or nisab for different assets such as gold, silver, and livestock, the question is what nisab is relevant on our modern financial assets? The nisab can be determined based on the nisab of silver or gold. This is equivalent to the current market value of 85 grams of gold or 595 grams of silver. According to the Hanafi and Maliki juristic schools, the nisab is calculated at the beginning and end of the year, and changes in between are overlooked. Any increase of property after reaching the nisab during the year is to be included in the total sum counted for zakah. This is considered the easiest and most applicable amongst the other juristic views, which has made the majority of scholars adopt it. The value of 85 grams of gold on May 1st, 2018 was about $3,901. So any Muslim who owns zakatable assets worth $3,901 or more, and who has held those assets for at least 12 lunar months, should pay zakah on those assets. We'll go over which assets are zakatable in a moment. So what happens when wealth reaches the minimum amount or nisab? The next condition is that these assets should be held for a full lunar year, starting from the day it reaches the nisab. The Arabic word hawl refers to this holding period of 1 lunar year after which zakah becomes due. Zakat al-mal is not due on a particular day for everyone, but it should be paid once per lunar year. Many Muslims choose to pay their zakat during Ramadan, both for the additional benefits of giving during this month and because it's easy to remember from year to year. Each individual can set their own hawl date based on when they've held their zakatable assets for a minimum of 1 lunar year. For people who choose to set a hawl date based on the solar calendar, the percentage of zakah is raised up to 2.577% instead of 2.5%, because the solar calendar is a little bit longer than the lunar calendar. The third condition that must be met is that the assets must be completely owned by a particular person or family. So assets owned by an organization or government are not zakatable. Zakah is liable on the assets that are completely owned and vested for the owners. Complete ownership requires that assets be accessible and disposable by the owners without the interference of others. So if you completely own an asset but would have to pay taxes or penalties if you sold it, this does not nullify the fact that you own it. So for example, an individual who has an IRA can access the money in the account even though they would have to pay a penalty and taxes if they sold it before reaching retirement age. This fact does not prevent the IRA from being zakatable, but zakah would only be calculated on the amount that would be left after applicable taxes and penalties. On the other hand, an employee cannot withdraw from a 401k or 403b account at their current job if they're below the distribution age. So this means the 401k or 403b is not zakatable until the employee either leaves that job or reaches an age when they're allowed to withdraw from the account. A person must also be solvent in order for zakah to be due from them. If a person has debt that is immediately due, that is greater than what they own, then also they are not liable for zakah. Assets that are zakatable include gold and silver, cash equivalents, assets intended for trade or sale, good current debt, livestock, crops, and minerals. All cash, gold, and silver are liable for zakah at 2.5% based on their values on the day of the howl. There are certain assets on which zakah is not owed. Those assets are considered to be capital goods, such as tools or factories that are not zakatable themselves. However, the income that's derived from them is zakatable upon meeting the conditions discussed earlier. Furthermore, personal use property is also not zakatable. So that includes your personal residence, your vehicles, clothes, and other personal belongings. Also, only halal and lawful assets are liable for zakah. So no zakah is required on haram or unlawful assets, such as money derived from interest, gambling, alcohol, pork, stolen money, bribe money, or any other impure money. And those assets or money must be returned to their lawful owners or donated to charity as purification. Finally, assets intended for retained ownership and for the purpose of deriving income are also not zakatable. So that means that zakah is not owed on the current market value of investment property and income-oriented stocks, but zakah is owed on the income that comes from those assets. So for example, zakah is not paid on the market value of a rental property. However, income that is derived as rent from that property and is held for the howl period is zakatable. So let's take a look at debt, both debt due to you and debt that you owe to others. If you make a loan, you owe zakah on any amount repaid as of the howl date, if it's in good standing. If the loan is past due and in bad standing, no zakah is owed until the owner recovers the debt and the zakah is paid once for all the past years it was in bad standing. If you've taken a loan and owe debt, the amount due before the howl date is deductible from one's zakah base. However, debt payments that are due after the howl date are not deductible from the zakah base. So for example, a person may deduct their current home mortgage payment, maybe what is due that month for them, from their zakah base, but not the entire loan amount. The interest portion of any debt acquired in a non-halal way should not be deducted from the zakah base. However, one may deduct debt that is a result of acquiring commercial assets, known as arud tijara, from one's zakah base. This relates to modern financial assets since bonds are also a form of debt. However, interest-based debt securities, including bonds, banking notes, CDs, commercial paper, money markets, and others that are liquid are liable for zakah only on the principal amount or market value, whichever is lower. Any gain due to interest accrued or market appreciation is not recognized as lawful and is not eligible for zakah. Such gains should be considered unlawful and purified by donating to charity. So zakah is obligatory on assets that have been held and saved for one full lunar year after reaching the nisab, or the minimum amount of wealth that after which zakah is due. This, of course, excludes any interest income that may have been unlawfully earned during that time. Most of us acquire money at different times throughout the year, such as from salary, inheritance, gifts, rental income, etc. So if you choose to be very specific and only pay zakah at the time it becomes obligatory, then you can track the earnings and pay zakah for each amount separately when 1 year has passed from the date on which you took possession of it. But an easier method is to pay zakah on all the cash you've held for 1 year since reaching the nisab. This really will bring a greater reward and raise you higher in status, and it's easier and more generous towards the poor and needy and others who are entitled to zakah. So for example, let's say in your bank account 1 year ago, you had cash earnings of $10,000. And throughout the year, that balance fluctuated. Maybe perhaps in the middle of the year, the balance went down to $7,000. And again, you have more earnings, and now you have cash in your account of about $15,000. So with this method, you would pay zakah on the $15,000. Now let's talk about the calculation of zakah on stocks. We'll use common stocks as an example since we get a lot of questions about them. And of course, our clients at Azzad know that we calculate zakah for them on an annual basis, and we send a statement showing the total amount to be purified and paid from their portfolio. This year's zakah statements were actually posted yesterday, so any client should have received an email with instructions for accessing it on the Azzad client portal. This calculation can be used for shares of publicly traded companies that you may acquire. So for the purpose of this explanation, we'll assume that the stocks held follow halal Islamic guidelines, since zakah is not owed on shares of stocks that are not halal. There are two basic intentions for purchasing a stock, either for the growth and appreciation of the stock, or for the income or dividends it can provide. So with this distinction, let's take a look at how we can calculate zakah on a portfolio of stocks. While a shareholder may reap the benefit of both growth and income from a particular holding, the original intention of why it was purchased is the key. So unlike taxes, we don't have the IRS looking over our shoulder or trying to audit us, but zakah is a matter between yourself and God. So your intention regarding your investment determines what calculation you should use. The zakah of a portfolio of stocks will be calculated by adding the zakah owed on income stocks and the zakah owed on growth stocks. So you may be wondering why even differentiate between growth and income stocks. Stocks held for the purpose of growth and appreciation are like assets that are held for the purpose of trading, and they're considered commercial goods, or in Arabic, arud tijara. For these shares, their zakah base will be based on the total closing market value of shares owned, or net asset value, on the hawl date. The net asset value is then multiplied by 2.5%. To give you an idea of how this calculation is done, let's take an example of an IRA account investing in a growth stock that has a market value of $50,000 on the hawl date. So to calculate the zakah, we must account for 10% penalties if the person is under the age of 59.5, and also their tax bracket. So assuming the person's under the age of 59.5 and they're in a 15% tax bracket, we would calculate the zakah by multiplying the $50,000 times 1 minus the penalty rate times 1 minus the tax rate times 2.5%. This would then give us the zakah due on the amount that they would have in hand if they were to withdraw from their IRA account. Now, stocks held for the purpose of deriving an income or for benefiting from dividends are considered to be capital goods. The zakah is not paid on the net asset value, but on the income that is derived from it. However, it's typically difficult to track this unless data is available. So the zakah base of each share of a company can be estimated by dividing the current assets by the total number of outstanding shares. The zakah base will be any amount in excess of 0. And of course, more accurate methods could be used if more data is available. So there you have a brief overview of how to calculate zakah on growth and income stocks, two investments which are commonly held by the American Muslim investor. When you're deciding where to pay your zakah, keep in mind the 7 categories of eligible recipients of zakah as listed in the Quran. So in the next few slides, we're going to have a quick pop quiz. And this is not intended to stress you out or trip you up, But we found that these practical situations can help people understand the concept more easily than when we just talk about it. So feel free to try to figure out the answer, either on your own or in the chat feature. And at the end of each question, we'll show you the correct answer and explain it. And for this section, I'd like to bring in Azzad's president and CEO, Bashar Qasim, to help with explaining some of the answers. Bashar is a certified Sharia advisor and auditor, which is an accreditation awarded by AAOIFI, the global standard-setting body for halal investing. So welcome, Bashar. So the first question that we're going to go through is for Abdullah. Abdullah is a 45-year-old engineer who has a 401k plan with his employer, Kenwood Corporation. And the market value of the plan on his zakah howl date is $100,000. His 401k contains stocks for capital appreciation only, and Abdullah's tax rate is 30%. He is not in debt and is fully invested in the 401k plan. So how much does Abdullah owe for zakah on his 401k? And then we'll give you maybe about 10 seconds to think of the question, think of the answer here. All right, so the correct answer for this one is D. The 401k is not zakatable because he cannot withdraw the asset. So again, if his 401k allowed him to take any withdrawals, in that case, he would be liable for zakah. But again, in a 401k where he's restricted, he can't take out the funds, he isn't deemed to have complete ownership. So in our next question, Khadija is a real estate flipper who buys and sells houses. She bought a house in Miami for $450,000 while she is seeking a good sale price for it. She received a year's rent on the house totaling $30,000. The market price of the house is $500,000. Khadija is not in debt and she kept all the rent money for a year. So how much zakah is she liable for after 1 year? And we'll give another 10 seconds for this one. So in this case, the answer is A, 2.5% of 530,000. So I know a lot of people are probably wondering, why is it just not on the rent? In this case, if you go back and read the question, you can see that Khadija's intention is actually to sell the house. She's looking, she has it on sale. And so for that reason, she's paying zakah on the market value of the home as well. If Khadija was not intending to sell the home and only retaining the house as a rental property, only for the income that it was generating, then she would pay zakah only on the year's rent that she had held on to, which was $30,000. Pop quiz question number 3. Ahmed was given a car as a gift. Ahmed intended to sell the car when he received it. It took him 14 months to sell the car. And how much zakah does Ahmed own on the car? So another 10 seconds here. So in this case, the answer is C. No zakah is owed on the car because it is not a commercial asset that he acquired with the intention to trade. So this also is a reminder on personal assets, we don't pay zakah as well. Question number 4. Yusuf is a key employee at Cisco, and he was given options to buy $10,000 shares of Cisco at $10 per share. A month before the howl, the price of Cisco reached $30. And Yusuf then exercised his options and purchased 10,000 shares of Cisco. So how much zakah does he owe on these shares? In this case, the answer is also D, $0. And this is because he does not own the shares for more than 1 year. Remember again that he exercises options and purchased the shares, but he hasn't owned those shares for at least 1 lunar year. Now, question number 5. Aziz is a 50-year-old business owner who has a SEP IRA account with Merrill Lynch. His tax rate is 30%, and he would pay a 10% penalty if he took money out of his SEP IRA. His advisor at Merrill Lynch invested the assets in Aziz's account in 5,000 shares of Wells Fargo's bank, which do not pass the halal screens, and 1,000 shares of Tesla Motors, which did pass the halal screens. On the halal date, the market price for Wells Fargo was $50 per share and Tesla was $220 per share. Aziz's investing objective is to benefit from the growth so he can sell the stocks later at a higher price. So how much zakah will he owe on this account? This one's a little bit more tricky, so read the question carefully and we'll go over the answer here in a few seconds. All right, so the answer is actually C, $3,300. And this is because zakah would only be assessed on the Tesla shares because the Wells Fargo stocks didn't pass the halal screen. So Aziz should actually sell the Wells Fargo shares and buy halal investments instead and pay zakah only on the halal portion of his portfolio. And again, that would be 2.5% of the value of those Tesla shares on the halal date after he accounts for the 30% tax and the 10% IRA penalty because he's under the age of 59.5. And question number 6. Hassan just found out that his advisor at Morgan Stanley had invested his account in bonds, which earned money only from interest. He bought the bonds for $10,000, but they're now worth $11,000. The bonds have coupon payments of 5% per year and mature after 10 years. The total amount he has earned so far is $2,000. How much zakah does he owe on them? So here the answer is A, $250 or 2.5% of $10,000. And again, because this is a bond, we have to remember the zakah is only due on the principal, since that is the halal portion, and no zakah is due on the interest gained, since that is considered impermissible income. So now we're going to open up the conversation to questions from everyone joining us today. Everyone, if you'd like to ask a question about zakah, please do so using the Ask a Question box on your screen. Bashar, are you with us?
Yes. Thank you, Fatima.
Okay, great. So I'll be waiting for some questions to come in, and we'll be happy to answer those. I have Bashar on the line with us to answer those as well. Okay. So, Bashar, first question. How do I calculate zakah for personal gold jewelry? Do I pay the full amount in excess of the zakatable amount, or do I pay the full amount in the first year, then the amount gained based on the gold price in excess of the amount from the previous year? So the example they gave is if in the first year the gold jewelry zakatable amount is $100, then in the second year the gold jewelry becomes $120. Do they pay zakah on the $100 or $120 or on $20?
That's a very good question. Usually the jewelry, according to the three madhabs, the Shafi'i, the Hanbali, and the Maliki, gold as a jewelry is not assessed, is not liable for zakah if they are being used as a jewelry. Now, the only madhab that makes the jewelry zakatable is the Hanafi school. So if you follow the Hanafi school, then the zakah is assessed in the jewelry, gold, and I'm referring here to the gold, not any other jewelry. It will be assessed 2.5% of whatever the value or whatever the weight of the gold. So regardless what the price or the value moves, it has to be 2.5%, and that is periodical every year at the date of the house. If the jewelry, gold, and other assets you have is above the nisab. So in other words, it would be 2.5% regardless what the price of the jewelry, and you don't just look for the excess amount. So it has to be paid on an ongoing basis. Now, the other three madhabs, of course, the gold, unless the gold is being used as a storage of wealth and as an investment or as a saving, this is not zakatable. So only if it's used as a saving or as a storage of wealth, then that gold or silver is zakatable, whether it's used as a jewelry or used as just as a saving.
Okay. Thank you, Bashar. Next question. It actually goes back to something we discussed in the presentation about loans. Maybe, Bashar, you can elaborate a little bit more. Can you explain on zakah if you loan some money to others? So, for example, if you've paid out a loan, you've given someone a loan, do you pay zakah on that money?
Yeah, that loan, if it's in good standing, if this loan is receivable or can be recovered, that loan is zakatable. So you pay the zakah on that money. The only situation where this loan is not zakatable, if that loan it's not recovered or it cannot be recovered, and the person that you lend the money is defaulting in that loan, and there is a big chance that you may not recover it, that will not be zakatable. The moment you are enabled to recover that loan, from the moment you pay the zakah only once, regardless of how many years that loan or that money stays in loan, and then you continue paying the zakah moving forward every year, since that money becomes that these assets becoming zakatable assets because it is money.
Okay. Next question. It is understood that no zakah is paid on rental property, but rental income it is. However, can I deduct the monthly mortgage payment from the rental income before I reach the zakatable amount?
I'm sorry,
I think what the question is, can I deduct the monthly mortgage payment from the rental income before I reach the zakatable amount? So I'm assuming maybe they mean the howl date or the nisab date. I'm not sure exactly what they mean by zakatable amount, but I guess, Bashar, if you can answer it, how do you deal with the mortgage payment? Like, say you own a rental property and there's an outstanding mortgage on it. How do you account for the mortgage payment for the rental income that you held for one lunar year?
Only the portion that is due before the date of the howl, that portion can be deducted from the zakatable base. Of course, AAOIFI, they have another opinion that they can be extended to 1 year, as long as it is due within 1 year. This can be deducted from the zakatable base, but any amount beyond that time is not deductible from the zakatable base.
Next question, how do you pay zakah on assets in mutual fund shares?
Yeah, that's a very good question. Again, depends on the mutual fund strategy, the investment strategy of the mutual funds. And as you know, mutual funds comes with different strategies. Sometimes they have mixed strategies, what we call balanced fund, where the manager aim for capital appreciation or income. So the mutual fund company or the investment manager should be able to run the formula to calculate these shares, to identify those shares that they are deemed to be intended for capital appreciation and treat them as a root tijara. In this case, you assess the zakah 2.5% of the market value of these shares at the date of the howl, or if it's really shares were intended to derive an income, we look at the zakah at the balance sheet of the companies of these shares, and you look what are zakatable assets, i.e., are there any cash or cash equivalent? Are there receivables? Are there inventory for sale, etc.? So, in other words, the the shares that they're intended for income, the zakah formula a little bit more complicated because you have to look through at the balance sheet, comparing with the ones that seem to be capital appreciation. You look at the market value. And then you, of course, when you look at the zakah for those shares intended for income, if there also any current debt, that current debt will be reduced from the zakatable base. And then you allocate the zakatable assets per share, and then you take 2.5% of the of that allocated assets.
Okay. This next question actually goes back to the question on loans and whether you can deduct bad debts from your zakah calculation. So, for example, if you have a business where you cannot collect the fees owed by your customers, can you deduct that from your zakah base?
Yeah, this is a very good question. And we usually get these questions from physicians who render services to their patients, and then their patients don't pay them for their services. The answer is no, you cannot, because the zakah, it has to be possessed by the poor person. So in this case, there is no way to achieve that condition, because the scholar said was zakatu tamlik, that you have to make the money available to the poor to own it. So the straight answer for this, no, you cannot assume that money as a deduction from your zakah. You have to inform the person. Maybe you could pay the person if he is eligible for the zakah. You can pay him, and he can pay you back. But you have to enable the recipient of that of the zakah to own that money and then possess that money. So just by going and deducting it, because this person may not be deemed to be ineligible to receive the zakah, so you have to be very careful.
So you can't consider it as paid zakah. Okay. So another question, let's say your 401k allows you to withdraw money. Do you owe zakah on that share of the 401k?
The moment they allow you, they enable you to withdraw money, and again, you need to read the terms and conditions of your 401k, and maybe you want to consult with the TBA, the third-party administrator of your 401k, and ask them, is there any chance that I can withdraw from my 401k? Usually, when you leave your job, when you terminate, or when you reach certain age, usually like around 60 years old, they'll enable you from withdrawing from that money. The moment they enable you from withdrawing that money, even if you don't, that money becomes zakatable, and you pay the zakah according to the formula that we just talked about.
And what if they allow you to take loans?
No, the fact that they allow you to take the loan, that doesn't deem complete ownership, because you have to pay that loan back. So that's not considered to be a distribution. So again, the full ownership in this case is not complete, is injured. So even they allow you to take a loan, that would not deem it to be that the money, you have complete ownership and complete access to it.
Okay. And what if you are the trustee of that 401k plan?
Now, if you are the trustee and you have the authority to terminate the plan and withdraw the assets, these assets becoming zakatable. So if you are in that position where you can bind the 401k and you can, let's say you are have a solo 401k, for example. In this case, yes, of course, you can make a resolution and you terminate the plan and take the assets. So that will deem to be a full ownership and full possession of these assets. So these assets becoming zakatable.
Okay. This next section goes.
What I want to emphasize here that again, there is not one single answer. The answer depends on the situation that you have in the 401k or in the profit sharing or any qualified retirement plan set by the employer.
Okay. We have another follow-up question. One, again, I think you did cover it on jewelry. Is there a difference in the value of buying and selling of gold, which number you use, and how the carat of the gold works? Like, for example, is it 14 karat, 18 karat, 22 karat? And also, do you pay zakah on other jewelry like silver, platinum, etc.?
Yeah, the zakah in this case in the gold and silver, platinum, diamonds are excluded as a personal assets or personal effect assets, unless they are, of course, they're bought with the intended to trade them. But if they were bought for the intended to use them as an ornament, there will be no zakah on those assets. Now, the gold and silver, again, unless it's Hanafi school, the other schools, they're not liable for zakah unless they are being used as a saving. In the Hanafi school, the same thing. Once they are zakatable, you go by how much real gold in these assets. Like, if there are mixed with other metal, for example, you exclude that metal. So in this case, that you have like 20 karat gold, you look at the what's the value of that gold in the jewelry that you have, and then you assess the zakat 2.5%.
Okay. The next question goes back to, actually it's somewhat like loans, but do you include accounts receivables in zakat calculations? So if these are receivables, and even if you have not recovered yet, but you mentioned before that you could recover it, do you go ahead and pay zakat to be on the safe side?
Correct. Those accounts receivable, they are zakatable because they are money that they are considered to be current assets, and most of these receivable they usually result from business transaction, so these are zakatable.
Okay. Next question. I have some land for sale. It's been on sale for 2 years but has not sold. How do I pay zakat on this land?
Yeah, that's very, very good question. Now, I want to say something here. Now, the urud al-tijara, in general, these are the assets that you intend to sell it when you bought it. So you have the intention to sell these assets and benefit from the price appreciation. Now, these are deemed to be urud tijara. However, the opinions of the AAOIFI and the Fiqh Council of OIC and other zakah houses, they use the time limit of 1 year. In other words, if these intended to be sold in 1 year, then they are deemed to be urud tijara. Otherwise, would be considered to be urud kunya. And if they are urud kunya, there are no zakah on it. However, if they are urud tijara, then the zakah is 2.5%. Now, in other cases, if these assets, for example, that you intend to buy and sell, and you trade these assets, that into a situation where there is a recession or there is an economical hardship, and you cannot really sell these assets. So in this case, you go, but by the opinion of the Maliki school, we distinguish between the urud tijara, the commercial assets, to be what they call the tajir al-mudir, what we call the retail merchant who really buy and sell, or the tajir al-muhtakir or tajir al-mutarabbis, the merchant who is strategic. In other words, they buy and they sit on the asset waiting for the price to move in a certain direction. So in this case, if and I think the the question is in regard to the second category of what we call tajir al-mutarabbis, the strategic merchant, or the strategic trader. So in this case, according to the Maliki school, you pay the zakah once you sell these assets. Once these assets are sold, then you assess 2.5% of the sale value. However, our Sharia members of our Sharia advisory board adopted that buying and selling for buying and selling it for a period of more than 1 year or 2 years or 3 years, according to Sheikh Muhammad Al-Zuhaili, our member of the Sharia Advisory Board. He deemed it to be zakatable, and you pay the zakah. And his argument that you are sitting on these assets with the intention to sell it in a period of time, like more than 1 year, aiming for a higher price, and that should not be on the expense or in the account of the zakah or the poor, because he looked at the zakah as enabling the poor or the recipient of the zakah and treat them as they are partner with you in that wealth. So again, the person can, I think, take the opinion of many zakah, scholarly zakah institutions, especially the Kuwait Zakah House, for example, what's one of the considered to be most prestigious zakah houses in the world, and they can just pay the zakah upon selling that land one time. Or if the person wants to be cautious and know that his intention, that is buying and selling, or selling after buying these assets, intention to sell these assets when they buy it, then they could go with the opinion and pay the zakah every year on the land, because it is deemed to be urud tijara.
Okay. There's a quick question, I'll just maybe answer quickly. The question was, do I pay zakah on individual investment accounts? Are they zakatable? And again, this just goes back to the idea of complete ownership. So yes, if you own this account as an individual, you can take that money at any time. So you're going to pay the zakah, which would be assessed after any applicable taxes. Of course, there's no penalty in that case, but there would be taxes that you would subtract to pay that. The next question that we have, and we have a lot of good questions, we probably won't be able to get to all of them, but we have a question that's saying, let's say I have 1,000 shares of my company, which was given to me over the years as part of performance bonus. My intention is not to sell unless it's necessary. I would also like to have the dividends as I have more shares. So do I give zakah on the dividends only once per year, or on the full market value of the shares when I sell them?
This is a very good question. Remember, those shares given to you as a performance from your employer, so they were not acquired through buying. So they will not be deemed to be urud tijara. So these are definitely not urud tijara, and they're not zakatable at the market value. However, these are shares, and they represent ownership in tangible assets of company. So you need to look at the balance sheet of the company and see what zakatable assets there in the balance sheet of the company, like what inventories, cash equivalents, receivable, if there is any debt, and then you calculate the zakat based on the balance sheet of the zakatable assets in the balance sheet of the company. No, you don't pay the zakah from the income. Zakah has nothing to do with the income. Zakah is it's based on an asset, and you should really seek the information about zakah from the balance sheet, not from the income statement of the company.
So you would take the zakatable assets of the company, for example, their cash, their inventory, their receivables, add that, and you would divide it by the number of shares outstanding for the company, and then multiply that by the number of shares you own. Okay.
Correct.
Okay. This is actually a good question.
I would just add another thing, that if there are taxes due on those, because usually if there are any taxes, let's say if this is if there are taxes due, you take a portion of a percentage of whatever due for taxes, and you can reduce your zakatable assets allocated to the share by any taxes due, or if there is any penalty, etc.
Okay. Another good question. Should I pay some kind of zakah even if I have no zakatable assets? Say, for example, a high income earner that has no savings or assets, do they still need to pay zakah?
The Prophet, peace be upon him, said, "La zakata illa an dhahri ghina," that there is no zakat due unless the person considered to own something. And so in this case, a person earning 1 million and spending 1 million before the time of the howl, there will be no zakat on that money.
Okay. This is a question somebody saying, I don't follow any school of thought. So do I pay zakat on my gold jewelry? I was told that it is not necessary to follow any particular madhab or school of thought.
Yeah, I think majority of the scholars, to be honest with you, they're with the opinion about gold jewelry and gold jewelry or silver jewelry, that the majority of the scholars, they don't see it as zakatable asset. If this gold is being used as a jewelry and it's really put to use as a jewelry. But again, zakah, it's it is a form of worship. It's between you and Allah Azza wa Jal, and you should really be careful. You know yourself better than others. Whether this is really intended as an investment or saving, or this is intended as an ornament.
I think we have time for maybe just two quick more questions. Another question going back to zakah on rental properties. Can you deduct any related expenses or depreciation for those rental properties from your zakah owed?
Remember, these rental properties themselves are not zakatable, but the income that you generate, whatever stayed the full howl, that becomes zakatable. So whatever you spend from it, any expenses that is really achieved, already taken out from or they're due before the time of the howl, those would be deducted from the zakatable base of that income. But depreciation of the property, should not be included, because the property itself is not zakatable. If it's the property zakatable and there is depreciation, that will show in the value, correct? Because the depreciation will show in the value of the property in this case. But
okay.
If it's not, then you cannot really deduct it from the zakatable base. I know depreciation is an accounting figure, and sometimes that would work with the taxes, but not necessarily to work with the zakah in this case.
Okay. And I think this will probably have to be our last question. Are profits from equity or stock day trading zakatable? And is day trading even permissible in Islam?
Well, we cannot say day trading is not permissible. As long as you do not get engaged in speculating, like of the form of gambling, as long as you know what you are buying and you know what you are selling, as long as you know all the requirements for whatever you buy to be a halal securities or halal assets. Make sure that the shares of the company meet the Islamic guidelines of how you can invest. You make sure that you fulfill the requirement of the purification and all of these tenants required tenants of investing. Yes, you can really buy and sell. Although at Azzad we frown on doing day trading, because unfortunately it's a speculative nature, and that's not the thing that we do here at Azzad. However, those assets definitely would be considered to be urud tijara, and they would be zakatable at the market value of the date of the house.
Okay. So I think with that, we've run out of time. We appreciate everybody who joined us today. for all of your questions. If we weren't able to get to your question, we apologize. You can send us an email to info@azzadfunds.com. And again, thank you, Bashar, for joining us and answering our questions. Inshallah, hopefully all of you were able to get a better understanding of zakah from this presentation. There will be a recording of it as well. So if you weren't able to catch all of it, hopefully you can watch the recording. And again, thank you everyone for joining us. Have a good afternoon.
Thank you, everyone.